watching Capital Market Live on Channels Television. This is where we review the trading week for the global and domestic market and the top stories you should pay attention to and maybe make your decision, going into next week, where you're going to stash money at this point. Thank you for joining us. I'm Ladi Williams. Let's kick off with the global markets now. We're seeing European stock markets rose after reports of a potential U.S.-Russia peace deal to end the war in Ukraine. The news pushed the stocks Europe 600 and France's CAC 40 higher, though defense stocks declined, keeping the DAX and FTSE 100 flat there. We see Asia-Pacific markets wrapped up Friday's session mostly in the red, with declines seen across major indexes, except in Japan. Hong Kong's Hang Seng Index, that fell 0.89% to 24,858 points, while mainland China's CSI 300, that slipped 0.24% to 4,104 points. In contrast, Japan's Nikkei 225 surged 1.85%. As we're looking at markets in Asia, now you see a fresh high for the topics there, about 41,000 points. So it was mostly red to close on Friday in Asia. And definitely South Korea's Kospi eased 0.55% to 3,210. But the tech-heavy Kosdaq managed a 0.43% gain to 809.27 points. Australia's S&P ASX 200 edged down 0.28%. So that was the picture in Asia mostly. But in India, afternoon trading saw the Nifty 50 down 0.64% and the BSE Sensex lower by 0.65%. Let's look at other markets now. That's talking about the U.S. We see U.S. markets, they finished higher on Friday, driven by strength in the tech sector, capping off a strong week for Wall Street. The Nasdaq Composite rose 0.9% to a record 21,450 points. And we see other markets there in the U.S. Closing Friday off in the green. But for the week, definitely we see lower cases there for those markets. And for the digital assets, we see it's mostly green for digital assets. See the likes of Bitcoin there, up about 3% for the week. See Ethereum, that's a bigger over 20% rise there. Then XRP, that added about 14% for the week. But we know those markets keep trading 24/7. That's talking about digital assets. Ethereum outperformed Bitcoin there by 20% with Bitcoin. That was up by 3%. All right, let's get a check on markets right here. Let's bring it home at this point to the NGX. Definitely still a positive week, even though Friday wasn't that great. But let's go for it with NASD first. NASD closed the week in the red. That's talking about the unlisted markets. They fell by about 1.26%, with market cap dipping by about 0.03 trillion to 2.14 trillion naira. Despite the overall decline, trading activity surged. Total volume jumped 351% to 27. Traded, that rose by 23.57% to 106.9 million naira. Industrial and General Insurance PLC led the gainers with a 22.86% advance, while Central Securities Clearing System PLC, that topped the losers chart, shedding about 7.76%. Let's flip over to the NGX now for the week review. See the Nigerian equities market delivered a strong performance overall despite a late week pullback. That's a Friday. The NGX All-Share Index market capitalization appreciated by about 3.18%. Closed the week at 145,000 points there. So it's still green, regardless of that close there. Now we have some company earnings with the likes of Mercure Industries. That's for the Q2 earnings. Mercure Industries reported a strong financial performance for the second quarter of 2025, with pre-tax profits soaring about 3.093 billion naira. Represents a remarkable 634% increase year on year, driven by nearly doubled revenue and improved cost discipline. The impressive results have already pushed the company's first half profit beyond its full year profit for 2024. If we look at the oil and gas sector now, see Cornell PLC earnings. They reported a significant decline in its financial performance for the second quarter of 2025. Company's pre-tax profit plummeted by 83% year on year to 775 million naira, driven by a sharp drop in revenue from its core white product segment and near doubling of finance costs. This marks the second consecutive quarterly decline. That's for corn oil. And talking about, the top stories this week, we see the insurance counter there shining from all that played out this week. Over 40% gain for the insurance counter. That's on the NGX, and definitely on the back of the Reform Act there. Now, in fact, it marks a pivotal moment for Nigeria's insurance landscape by embedding zero tolerance for delays in claims settlement, establishing a dedicated insurance protection fund, and mandating key insurance policies like motor vehicle, public buildings, and builders' liability. The legislation aims to rebuild public trust and significantly boost insurance penetration. Well, joining us to unpack this, we have Mrs. Ikeoma Zebe. She's the Deputy President, Nigerian Council of Registered Insurance Brokers. Also, Managing Director, Crystal Trust Insurance Brokers Limited, and Chairman of the Nigerian Insurance Industry Committee on African Continental Free Trade Area, Vice Chairman of the African Insurance Brokers Association. She joins me right here in the studio, helping us make sense of what's playing out today, and quite a number of hats you wear. And I'm wondering in my head, how do you manage to juggle all of these responsibilities? Incredible.
It's just taking on challenges. The same way other people too feel they are capable.
Right.
And then you're encouraged, and you continue to do that for an industry that I love so much.
Fantastic. I think I need to wear more hats. At this point, I'll follow your footsteps. Yeah.
Thank you, Laddie.
But let's flip over to what the data is saying about insurance penetration in Nigeria.
Yes, please.
We're seeing penetration for 2023 about 0.45%. 2022 shows about 0.34%. Then 2025 estimates were about 0.5%. So there's been some kind of improvement, but not where we want to be.
Yes, please.
Health insurance coverage, 5% of the population. Motor vehicle insurance coverage, that's about 28% of vehicles insured. Then if you're looking at, our peers, in other African countries, see South Africa leading with insurance penetration of 11 to 12%. So now we have the act. Is this a silver bullet that takes us higher when it comes to insurance penetration?
Yes, indeed, Laddie. Everyone is excited. Everyone in the Nigerian insurance industry is right now excited. Reason being that it is going to be a win-win for all the stakeholders. It is going to be a win-win for mostly the consumers. The reason that we offer insurance services in the first place. It will be a win-win for our national economy. It will be a win-win for investors in the insurance industry. And I listened to you when you were reeling out how the stock market is in favor of
investors were really excited.
Yes, in the insurance industry. So it has been a week, really, and we intend to remain up there. It is also going to be a win-win for those of us that are the operators, because when consumers are happy, we are happier for it, because it is a validation of the things we do as operators. And guess who is also laughing? Our regulator, because the law has given them now enormous powers to not just to regulate, but also to enforce. And you spoke about insurance penetration. What has happened really is this. All the while we've been compared, Nigeria has been compared, Nigerian insurance industry, with other insurance markets like North Africa or South Africa, and you see that we're not doing as well, or seem not to be doing as well. Reason is because oranges have not been really compared with oranges. It's just like comparing oranges and apples. In all of those other jurisdictions, insurance, everything insurance is put into one basket. In our jurisdiction, say for instance, pensions, which accounts for a large chunk of insurance funds, was sliced off, and then transferred to National Pension Commission, and we lost that with Pension Reform Act. And then you talk about workmen's compensation. Workmen's compensation, the act was repealed by the Employees Compensation Act. And then it was then brought under the purview of National Social Insurance Trust Fund. So all of these things, when you keep slicing them off, and then whereas the other jurisdictions, they all remain in one basket.
So the likes of South Africa, they've not sliced anything up?
No. So you see, we are not doing very good comparative analysis when we do that. But be that as it may, you can see that we keep improving, like you noted, over the years. And then this act is going to give us more impetus. Nigerian Insurance Industry Reform Act 2025, not 2024. The bill was
a bill for 2024.
Yes,
now it's an act
for 2025. So we're all excited. NICOM is going to do more enforcement now, have the impetus to do enforcement. And then other things have been created in there that should also deepen penetration. We have the digitization now provided for in there, not just the millennials, but the Gen Zs who are constantly having their phones in their hands. They will now have access, to insurance very easily. Then the wordings of policies will be modified.
Now, talking about, the Gen Zs there and insuring from their phones.
Yes.
We know that those phones
Yes.
have gotten really expensive now, due to currency devaluation.
Yes, please.
And all of that. So people are spending like up to $2-3 million to buy a phone.
Yes.
So they can insure that.
They have been doing that, actually. There's no one carrying a phone, which is almost like a small-scale industry in your hand, and you're not providing insurance cover for it. So people are getting more aware. And insurance, they've been living up to it too, bringing out products that cover all of those things. So people have been covering their cell phones, the high-end ones particularly.
And, talking about, NICOM,
yes,
this
please.
one.
Yes, please.
There's also zero tolerance for claim delays.
Yes.
We know that has been an issue,
Yes.
that has made, a couple of, consumers that should be actually buying some of these services say, you know what, I'd rather just take the risk.
Yes.
Because there's so much delay when I'm trying to make a claim. How do you think that's going to work, really? How do you think NICOM will be able to enforce this?
Yes. We're very happy. When I say we, as an insurance operator. The insurance operators are very happy. Don't forget that the reason that an insurance company is opened up in the first place, what they are selling is if something happens to you, I will pay the claims. Don't forget that what an insurance broker is selling to the client is hope that when a claim occurs, he will get compensated, and that is claims. Don't forget that a regulator is very happy, when a consumer who has lost an asset is paid, the claims are paid. So we're extremely happy. But you know what has happened in our industry? I don't know whether to call it, to say it's unfortunate, but all is well. We seem to hear more about claims that have not been paid against claims that have been paid. And certainly, much more claims have been paid by insurance companies than the ones that have not been paid. And then again, the ones that have not been paid, they are in two instances. Some are the ones that are not even genuine claims. When I say genuine, I don't mean they are fraudulent claims. Of course, there are fraudulent claims, but there are claims that the insurance companies would repudiate by right because the loss might not have been what the cover envisaged in the first place. But you see, nobody takes time to really analyze these things so that people will understand. But I'm not discountenancing that there have been one delayed or the other, in claims payment. But I think it's high time we started to toot our horns and then publish, the number of claims that we have paid vis-a-vis the ones that we have not paid. And I tell you, with this law now, there's even going to be much more. The consumers have been given much more rights, which is very good. We love it. You'll be surprised to hear me as an operator say this, but we all love it, actually. Like our regulator will tell us, find more reasons to pay claims than you would repudiate, even when you think you may not be necessarily right to pay the claims.
Right.
That has been, our disposition. And so what has happened in Nigeria Insurance Industry Reform Bill, what has happened is this. The insurance, when there's a claim, insurance companies have been given time limits in the new act, very stringent time limit, within which claims have got to genuine
and
claims.
talking about time limits
Yes,
at this
please.
point, we've reached one little limit right now, but we'll continue
Okay.
right after this break. Definitely, we're talking about Nigeria's insurance industry and the act we're seeing. So many reforms at this point. We'll continue the conversation right after this break. Just stay with us. Welcome back. Still watching Capital Market live on Channels Television. We're talking the Nigerian Insurance Reform Act 2025 and what that means for public trust. And helping us to unpack this, I still have with me here Mrs. Ikeoma Ezebe. She's the Deputy President, Nigeria Council of Registered Insurance Brokers. And definitely she was talking about time limits at this point.
Yes. So what I'm saying is that the law has provided even more stringent time limits in the sense that is going to be is going to start counting from when a claim has been submitted by a client and when the insurance company is supposed to have paid it. And then also the insurance company.
I'm trying to imagine how much time that would be. I know we don't have all of those details, but what are you seeing, when it comes to time limits?
Yes, I'm thinking maybe time limit of about 2 months. From the time that you have lodged the claim. But then it gets even better because an insurance company would be expected that you should have your service level agreements, which you have drawn and given to the regulator. So it's as if you are saying, hold on to me if I don't live up to this. And then, of course, the law gives the regulator the powers to even say by regulation or guideline, this is the limit, I don't want you to go further than. And so everything is focused on the consumer, how it will be easier for us to pay that claim to the consumer within a given period.
And I'm also wondering, if the insurers can actually cope.
Of course.
What helps them to cope
yes.
with shorter time claims?
Yes, whether shorter time or longer time. The issue is that once a premium has been paid, some part of that premium has been already earmarked for claims. And don't forget that this is a pool of risks. And then the funds for claim settlement is also a pool. And so, and with digitization and modern day equipment, administrative work is now made easier, and then they are able to cope. And I know all of them, all the insurance companies are poised towards making this happen. The brokers representing the consumers are also poised to collaborate with them to ensure that the consumers are well served, and with the regulator wielding the big stick, we have no reason to falter. Right. We have no reason because the national economy has got to get better for this as well.
We're aiming for $1 trillion economy. And
yes.
That kind of economy needs a lot of insurance.
Exactly, for sustainability.
Yeah,
and this is what this act seeks to do.
So do you see industries or consumers that might be somewhat disrupted from this act when it comes to the new rules at this point?
If you talk about disruption, I would say for our clients, they'll be extremely happy. You talk about the government, federal government, or governments generally, they'll be extremely happy because there is a strong legal framework, that will make sustainability run and therefore put the economy on a very good, better footing. If you talk about the operators themselves, I would say yes, the law is more stringent for us, but do we have the will to embrace the stringent measures? The answer indeed is yes. We have the will. It's something that we already envisaged, and because we want to serve our clients better. We want the economy to run better. So when there are challenges, you brace up, because we cannot continue to do things the same old ways that we've been doing it when the world is evolving. And so the things that we're doing are equally evolving and going with the times. So we're all waiting with bated breath, excitement, of course, for the regulator to come out to roll out guidelines for the transition period. And then we brace up and engage it, and everyone will be happy.
And
happier.
when it comes to financial services,
Yes,
we
please.
always have that segment
Yes, please.
in the population that's underserved. What are you seeing, in that direction? Do you think, some of those, communities will be brought in?
Yes, indeed. Yes, the underserved, financial inclusion. That is one thing, again, that this act has done. It has taken that into consideration so that all of those that were not under the insurance bracket, within the country, especially those in the hinterland and all of the places, they've been well captured under that. Insurance penetration has very well been taken care of there. And do we have the will to move on? Yes, indeed, we do, because we are the link between the insurance companies and the clients, and we will be clients, so everything is embedded there.
So are we seeing, more demand for insurance products, going forward?
Yes, indeed. I think there will. From all indications, there will be more demands for insurance products. And are the insurance companies ready, to bring out new products for approval by the regulator? Yes, yes, they are, because we've been envisaging this. Like I said, we cannot continue to do things the same old way. We are moving with the times.
Right, and I see the real estate industry is also targeted.
Yes, yes,
a
indeed.
lot here.
Yes, but
when it comes to properties.
Yes, but you know what has happened? Actually, in the old law, which is the Insurance Act of 2003, there has always been insurance of public buildings. There was also insurance of building under construction. But the difference here is that the regulator now has powers of enforcement to make this happen, unlike the other one, where they would be dependent on another agency to enforce. Now, they have powers of enforcement, and that is really going to help quite a lot.
So to that developer there that's that's building a property.
Yes, please.
Right now, that means
Yes.
we're seeing more costs for them.
Well, I don't know whether it is really more cost, because it saves them at the end of the day. Let me tell you what these insurances are. All of these compulsory insurances, they are made compulsory because they are made for the benefit of third parties. And these are liability insurances. And these will take care of the duty of care of any operator. Like you mentioned, the developers. When you're building a place, you have to have an insurance that will cover third parties that would be within that place. If you don't have adequate insurance cover, no insurance cover at all, and something happens, it could be a third party, it could be property damage of a third party, it could be bodily injury of a third party, it could even be death. It then means you are on your own. You have to pay all the compensation. And liabilities, could really be stiff. They could wipe away operations of anyone. That is why taking care of liabilities by insurance is even far, far more important than your own material damage. That is the one of the insured himself. And that is why third-party liabilities are made compulsory, by the act.
Yeah, because we did see, a couple of properties in recent years. Last year we saw, a couple of them actually come down.
Yes. Yes, we saw all of that.
Lives were lost.
Yes, and they were not covered by insurance, very sadly. So this act now is going to take care of all of those excesses, because the regulator, National Insurance Commission, will not be there and not now enforce, now that the law has given them that teeth.
Right. I guess, at this point, we're hoping for the very best, going forward for the industry.
Yes, we are.
Experts are expecting maybe mergers and acquisitions with recapitalization and all of that coming for insurance companies. So I guess exciting times, I guess.
Yes, indeed. And you know what, with mergers and acquisitions, oftentimes I see people, when you mention mergers and acquisitions, they seem to say, like, God forbid.
Like it's a bad thing.
Like it's not. Some people intentionally, some big companies intentionally come together to merge so that they will be even bigger. And then there are some other small companies that could then also come together, merge, and then come out big. There are some small companies that may have issues. Whether they have issues or not, they may also want to be swallowed up. And there are bigger companies or big companies with larger appetite that would readily swallow them up and then get more expanded. And when that happens, it's a win-win for everybody. There's no need struggling to have a small pie that you're just keeping to yourself and it's not growing.
You're not able to serve and
Yeah,
grow.
but when there is a big pie, everyone gets a larger part of that very big thing.
Thank
or a
you
large
so
part
much.
of that big thing.
Thank you so much. Well, it's
You're
great
welcome.
having this conversation with you. Thank you so much, Ms. Ekeoma Ezebe, Deputy President, Nigerian Council of Registered Insurance Brokers. You're also the Managing Director, Crystal Trust Insurance Brokers, Chairman of the Nigerian Insurance Industry Committee on Africa Continental Free Trade Area. Thank you so much for sharing your Saturday with us.
Thank you very much, Ladi. It's been my pleasure.
Thank you.
I look forward to another session.
Fantastic. Thank you so much.
You're
So that's
welcome.
it. That's Capital Market today. But another top story this week. We see Sulaiman has bought Sterling shares in a bold move that underscores his confidence in the company's prospects. Abubakar Sulaiman, the non-executive director of Sterling Financial Holdings PLC and CEO of its subsidiary Sterling Bank, he did buy August 6th about 19.684 million ordinary shares, about 8.16 per share. So those are the top stories there. One of the top stories for this week. But thank you so much for watching. Definitely hope you have direction going into next week. Where are you putting your money? Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.